How you doing, YouTube? Policing Pips here, and today's video is more of a educational quick hit on how my strategy has slightly changed and how you could possibly use what I do as far as my daily analysis to allow yourself to grow your account and either pass a combine or just become a good, more consistent futures trader going forward. So enough with the talking. We're going to get right into the charts. So my daily routine is very simple. Every single day I do the same thing. I wake up, whatever time I have my coffee, I come to the charts, and then I do the same thing every single time I get to the charts, right? So the first thing I do is I come to my chart here on my Thinkorswim account, and I'm going to use the Nasdaq as my example for everything. You can do this on any futures that you're trading, or if you're a stock trader or whatnot. But for me, even let's say Forex as well, because it's kind of a 24-hour thing as well. So let's go with futures for now. So this is my chart for the Nasdaq. I'm going to zoom in to from 8 o'clock on Friday to current. We are currently closed, right? The market is not open. It is Saturday. So we'll be able to do this without seeing any movement. You can do this every day, even though the market's moving. So how I work is I look to check the levels for the day. I use the previous day low, the previous day high, the previous day close. I use the overnight high and the overnight low. Overnight, I consider any time from close of the previous day until open the next day. So a lot of times I'll be doing this and my high or low might not have been settled yet. Once the day starts opening, I may adjust it a touch, or I use some of these levels if they're kind of close as different levels, but I mark that in my head. So I'll come to this chart and we'll work from here. So we're on the 5-minute. That's fine. However you want to do it, whatever time frame. So 8:30 here Central Time, 9:30 Eastern. We go to this first candle. On this first candle at 8:30, you can see straight above my cursor here, the crosshairs, it goes straight up to this level here. You'll see this will be the day and the time. This will be the open, high, low, close, right? That's all I'm looking at. So on the day, right, we're looking at 8:30, the open, and then over here we get to 1500. I like to use the 1500 candle on the 5-minute, and I use the open for my daily settlement, right? So my previous day close is this purple line here. So I'll look at this line, and that's usually the first one I'll mark. So at 1500, the open was 15315.50. So I double click this, 15315.5. Okay, I hit OK. My level adjusts, and then we go from there. So the high of the day was pretty much spot on. I'm going to move this down to get it out of the way. The high of the day seems like it was this candle just before close at 1445. So we look at the top again. The high of the day while hovering on this candle, the high of the day is 15334.25. So 15334.25. Same thing. Boom. Now my levels are set. The previous day low seems to be on this 8:30 candle. So it never really broke anywhere from open all the way through the rest of the day. It never broke down lower than that. So on that 8:30 candle, we're going to look for the low, which is 151.89.75. So 151.89.5. And then my overnight high and my overnight low isn't going to happen now because we're on the weekend because of the market being closed. So tomorrow in the afternoon, in the evening, I'll be able to set these, but for the sake of this argument, we'll use the day before, and everything between 1500 and 8:30, I'm going to use as the overnight high and the overnight low. So for now, this overnight low here looks like it's this point at around 755. So the low there is 151.7675. So 151.7675. Boom, that's that one. And then we were very close to the previous day high being there. So I'm going to use this as a different support level. Maybe I'll put it right at the top of this candle here. It seems like it's a solid support. We have sort of consolidated below there today. So once the market opens, I'm going to readjust that. But that's how I set my level. So once I set my levels on this chart here, I have, I can look at the historical data, right? This is the 5 minutes, but I start to zoom in a bit and try and check on where certain levels are and where we are. So we're right now we're sitting above the VWAP. A lot of times I like to see price come back to the VWAP, depending on trends and whatnot. I look at that. But after I go to this chart, I proceed to move to my next chart, which is pretty much my value area chart. It's a little bit modified. We're going to focus on the top two, which is the Nasdaq. The bottom two is the S&P. So it's the same thing. S&P's on the bottom, Nasdaq are on top. So what I like to look at is the one on the right. First, you're going to see our levels overlap, because all of my charts are confluenced. So my levels overlap. They impose themselves here, so I can see where they are. I can see where a lot of the volume is from the previous day's session and where the points of control are. These white lines are the points of control. The yellow lines are the value areas, where price spent most of the day and where it wants to go back to. So if you watch my video on Friday, you saw that one of the reasons I took this trade is because it was at the base of a value area. It was at the overnight low, and we were looking to reverse, and then this point of control was actually lower, so I was looking to break above that point of control and carry it back up to the upside, and it worked out. But the reason I draw these levels is because price really does like to return and test, and it has a rhythm to it, right? So I'm looking at these value areas. I look at this 30-minute chart on the right. This is only during market hour sessions, so we could see the gaps that have occurred from the overnight sessions and over the weekend. So I'm looking for gaps like this one here on Monday and checking the weekly momentum, right? That can lead to me making decisions throughout the week as far as my bias, if I'm more long, if I'm more short biased. Obviously, I made some money this week on downsides and upsides, so it's just a matter of how the levels are playing and how the value areas are. So a lot of times I like to fade off of value areas, or I play continuations through them depending on the strength of the candles. But I use the levels as my points of trading. I don't write, like if I'm in the middle of a level, like right now, if this broke down to somewhere in the middle here, you don't really have a trade because you're not near a significant level that allows you to make a entry based on risk to reward and the chances of it continuing your direction or reversing off that direction based on previous price action. Okay, so I look at these charts and I look for the value areas. I look at the value area low, value area high, and I have this. It's hard to see on this right now, but this candle here, this white candle, a lot of times this candle will appear, and as it appears in a chart, it tends to show a momentum change or an increased volume of buyers or sellers. So a lot of times it'll show maybe a reversal, or it's keyed off on a certain level where there was a huge order, and it'll show up hollow. And if it confirms, it fills in. So I use that as a confluence as well on, say, if this was running up and this bar turned white, and I expect it to be a form of resistance, I look to short that off of that level. I can share this whole setup with you if you have Thinkorswim, so you don't have to load any of these things. They're already preset onto the charts. I'll share that in the link description. So this is going to be your 30-minute chart, only during the open hours, no overnight sessions. And then also here, we're looking at the 5-minute. You can put this back on 30. I do, depending on my time frame of trading, but usually my day trades are on the 5-minute. So that's why I'm looking here. So after we progress through here, I use the points of control as decision points as well. So like here, during this trade, this will move as it's active. So as it flips, say it flips down or up, there's a change in where the most orders for the day are sitting. So it helps you just make certain decisions at certain points. It doesn't tell you exactly what to do. You just have to have a good feel for watching this market day in and day out, and understanding what it does at certain price levels. We have a 200-day moving average here. It's an exponential moving average, so I just use that as confluence as well. So once a lot of these things kind of form together, and you can see price action. I trade these flags, stuff like that. But I'm really just looking for confluence at levels. So after we look at this one, like I said, we're looking for gaps. We're looking for trends on this 30-minute. And then you can also see this blue bar. All these blue bars is where there's a solid amount of orders, pending orders, and all that. And then you have your larger scale value area zone right here, this white line and that white line. And then this red line is the point of control for this whole larger time frame, 10 days on the 30-minute chart. So that's what I'm looking for. I'm looking for gaps. I'm looking for trends. This one I'm looking for levels. I'm looking for points of control and stuff like that. So also, if we go down one more thing, I tend to look at my trading view. I don't have live data on this, so I'm using the daily to just get major structure points and trends and just taking a look at overall picture. So trading view is easy to it's free. You get a bunch of ads, but it's free. As this goes on, I have this drawn out from a longer time period. I have these 3 major levels of channels that it's been stuck in, and then I use levels that I find to be the most full of orders, and that's where I draw these larger value zones. So I consider myself good at being able to eyeball what a value zone is for myself, and then use those zones in confluence with all my other charts and current price action at those points to make better decisions. Right? I drew these lines up, I don't know, a few weeks ago, and they're still acting as good support and good resistance. Not to say that they'll hold forever, but until they don't hold, I use them as a pretty good guide. So I'll go from here, from the daily down to the hourly eventually, if I'm on like a day trading, if I'm in the middle of a day. So this data on my trading view does lag by 15 minutes. So I use these only as pre-market analysis, and then just seeing where I am in relation to some of these structure zones, right? So I just extend them out as I need them. We're approaching at this point another structure point, so we're going to have to make a decision on Monday, or this is going to open on Sunday night, and we're going to see where we're at. So, but we're consistently hitting off on these levels, and that's why I do use the trading view more of as an overview, and not so much to make trading decisions during the day. It's more of a just weekly, so that's why I usually keep it on the daily. And I can see, I go down to the hourly just so I can see a little bit more of what the price is doing at these particular levels once we get to these levels. But for the most part, I just kind of look for the trend. I kind of look for major support levels over a longer period of time. So I like it when the price comes back down from these all-time highs, because it allows me to have these historical price values that allow me to make even better decisions, to make more educated predictions and where the market's going to go, and then it goes wherever it wants. So that's my basic strategy as far as levels, as far as just my analysis every single morning. That's exactly what I do every single morning. I just adjust those levels. I check the value areas. I check where the previous day close was and that VWAP, and then I use this weekly here and there as I get close to making trade decisions for the week, and it just allows me to make better decisions consistently. The more you do everything the same every single day, be it if you don't even look at the charts, and you do one single thing the same every single day, and then you add something else the same, just consistency. The more you can do the same thing, it becomes boring and monotonous, but it's not. It's just something that keeps you in a good routine, and routine helps you make sound choices with less emotion and all of that. So one other thing I'd like to say that helped me get past, here's that passing step 2 combine, which I'll make a quick video on also coming up. What helped me get to this point was being able to minimize my risk to the downside with the same way I made these analysis, the same way I analyzed every day. Instead of starting with full positions, I started working on entering with a feeler position of, say, one contract. So I enter my first contract, and then I'll allow myself, let's go back to a chart here so you can see. Say we're in this Nasdaq here, and we're going to pretend that today is the opening here, right? And I anticipate that since it hit off on this low, we got that confluence, we got the reversal, we're looking to continue that uptrend that's been going on for the past few days. And I want to get my feeler position. You don't have to be perfect with it, right? You're at this base here, market opens, it pulls back a bit, and you get in around this 850 candle here, and then you start to see if it pulls back a little. If you have your stops down below the low, where you think if it continues through there, you're gonna be wrong, right? You're only gonna lose that one contract's worth, however far you set it to your risk tolerance, right? So you're only gonna lose that amount. And if it comes down and stops you out, it comes down and stops you out. You have plenty of opportunity moving forward, right? And then as I go, if I believe that this position I have some conviction in it, right? I set maybe another entry above 15,225, and then I set another one above the VWAP. So now, as I'm entering these new position and the position's moving in my favor, I'm adding contracts. And then as I add one contract, two contracts, three contracts, I can trail my stop every time I add a new contract. I trail my stop to the break even of the prior. So even if it pulls back, I'm only losing the same amount I was risking. So you're never increasing your risk, but you are increasing your position size. So that allows you to have that exponential growth on some of these big moves. However, at the same time, it doesn't increase your risk and allow you to blow up your account. So yes, a lot of times you're going to get a run up and stop out at break even. But sometimes, hey, say this wedge pattern here, you're expecting it to break out, right? It comes through. You decided, hey, once it breaks above the VWAP, I'm going to take an entry. Or, hey, even once it hits the base here, you get your feeler position in here because you could take a little bit more of a aggressive position as it gets to the base of your wedge pattern. So it gets to the base here, you enter your position, your one contract. Then you say, hey, if it breaks above the VWAP, I think it's going to keep on going, right? And then you enter a third contract just above the top of that flag. So now you're in three contracts. You get a little bit of a pullback, you never get stopped out, and then you run it up, and you just trail your stop as you go, as you feel your profit targets are, being met. If you feel like you're convicted it's going to get to the previous day high, maybe don't trail as fast. If you're in it to get out before a certain time, like by noon, hey, look, you got in, you got out. Now you have three contracts worth, and you only had the risk of one contract. So that's how I was able to adapt my strategy a bit to risking the same amount, but gaining those bigger gains and then just taking those tiny losses or break evens. I could take a bunch of break evens and then hit one trade for the day and have a great day. And then I could take a bunch of losses and still only be down just a touch. So that's what kept me in, and that's what was able to allow me to do a graph like this over the last week. This was when I was home. This was when I was out on vacation golfing. So you could tell the difference where you have preparation and where you don't, but that's another day. I just made this quick so you can understand the daily process of what I do. And if you have any questions, comment, text me if you got my number, and we'll do more of these. All right. Until next time, peace out.